and help you pick the right stock at the right time.
Good morning, this is Bloomberg Quint Live and you're watching Daybreak with me, Alex Matthew. First, the headlines. Asian markets are off to a strong start after stocks on Wall Street rallied. The dollar and yen are little changed. Infosys CEO Salil Parekh tells Bloomberg that the time is right to sacrifice margins in order to achieve growth for the company. Chinese conglomerate Fosun International has become the fourth party to express interest in acquiring stake in Fortis Healthcare after it submitted a non-binding offer last evening. And the government's principal economic advisor Sanjeev Sanyal says that the government will address the cash crunch problem in various states soon. Let's turn to international markets now, and US stocks gained for the third day in a row on Tuesday, fueling the rebound rally from 2 weeks of intense selling pressure. Bloomberg's Abigail Doolittle summarizes the action from Wall Street in this report.
The bulls came through for a third day in a row on Tuesday, helping to fuel the rebound rally from 2 weeks of intense selling pressure. The Dow, S&P 500, and the Nasdaq gained by between about 0.2% and 0.5%, reversing modest declines from earlier on in the day. It was a relatively broad-based gain, too, with 8 of the S&P 500's 11 sectors trading higher, real estate and consumer discretionary up top. Now, relative to consumer discretionary, Under Armour was a top boost, up 17%, the stock's best day since January of 2016. This after the athletic wear company beat fourth quarter sales estimates and offered an achievable outlook for 2018. Also higher in that consumer discretionary space, TripAdvisor, the online travel agent, climbed by about 6% ahead of reporting earnings on Wednesday. Plus, M&A speculation continues to swirl around the company. Another big gainer on the day, GNC, up 18%. This on the news that China's Harbin Pharmaceutical Group is going to invest $300 million in the struggling health retailer. Lower, however, the energy sector, helping to explain why Tuesday's gains were relatively small and produced a tight tug-of-war between the bulls and the bears. In New York, Abigail Doolittle, Bloomberg News.
So earnings taking over from tensions with regard to trade, but the big update from yesterday was that President Donald Trump has said that the US is talking to North Korea directly and at high levels. And this comes at a time when the president is in bilateral talks with the Japanese Prime Minister Shinzo Abe. Bill Faris of Bloomberg News has more.
A lot of the developments between the U.S., South Korea, and North Korea took place as a bit of a surprise to Japan, which didn't look like it was really consulted through the process. And of course, President Trump seemed to very quickly accept the invitation to meet with Kim Jong-un. So I think that's one of the issues high on Prime Minister Abe's meeting with President Trump down in Florida. And what the president said is that there are very high-level discussions going on at the highest levels, he said, and it's hard to know whether he means something more than the CIA director, Mike Pompeo, who we believe has been working with his counterpart in North Korea, or if there's other officials basically at the highest level of the administration also talking with their counterparts in North Korea at this point.
Just say the CIA director were talking to his counterpart in North Korea. How unusual would that alone be?
Well, you would expect some kind of a channel to exist, just because these are, two intelligence agencies of countries that are technically still at war. But to have the director or people in the director's office speaking, that's very unusual. It's unprecedented. So that's not something we've seen in prior administrations. We've all long had a channel between the U.S. and North Korea through the United Nations, but in the past that always focused on trying to deal with U.S. detainees in North Korea, not with setting up summits or talks or anything like that. So everything we're seeing here is basically treading new ground.
Well, we told you that the US benchmarks had gained between 0.9 and 2.7%, and that essentially has taken the positivity to the Asian markets as well, and they've opened strongly positive in early trade. The Nikkei, as you can see, is up over 1% in early trade. We'll have to see how China pans out, and that will bring you very, very shortly. But before we do, let's go to the trade setup in India. Jayesh Khilnani and Agam Vakil are here to set you up for the day's trade back home and also to tell you what's happening in the futures and options space. Morning, Jayesh. First to you. What's on the cards today?
Morning, Alex. Looks a promising start as far as the SGX Nifty is concerned, given the cues that we got overnight from the US, Europe, and also early Asian hours as well. So if you look at the SGX Nifty, that is pointing to a 50-point gap up and an opening above the 10,600 mark. But let's have a look at how some of the areas actually panned out. So you had from the banking space, ICICI Bank and HDFC Bank, which gained more than 1% each, followed by Wipro and Dr. Reddy's. It was a mixed close for the entire area space because you had Tata Motors and Infosys which declined in trade. Now if you have a look at the commodity space, muted cues coming in from the entire commodities basket. If you have a look at crude, that is trading about 0.5% higher after an equivalent gain overnight as well. Now, if you look at the base metal space, that also closed mixed on the London Metal Exchange. No big moves for any of the base metals except for tin, which actually managed to gain about 2% for itself. We had aluminium and zinc, which closed higher for themselves, and we had copper, nickel, and lead, which closed nearly 0.5% to 1% lower for themselves. Now, if you look at the Shanghai Futures Exchange, what is noticeable over here is that Shanghai Steel that has opened with a gap of about 2.5%. So we'll have to wait and watch how the entire trade pans out. If you look at gold prices on the auspicious day of Akshaya Tritiya, that is trading soft, just about 0.2%, but still very close to the important 1350 per ounce mark. So once again, wait and watch for that trade as well. Now, if you look at the fund flows that we got as of yesterday, have a look at the FIS sell number. That's a big sell number, close to 1,000 crores selling as of yesterday, while the DIs actually pumped in about more than 700 crores. If you have a look at the month-to-date numbers, the same trend continues. The domestic institutions have pumped in more than 4,000 crores, while the foreigners have sold in excess of 1,250 crores for the entire month of April. Now, if you look at the indices that key indices that we had, the Nifty Bank Mid Cap and the Small Cap Index largely closed flat in trade. Let's have a look at what was actually gaining in trade and losing. So we had the Nifty Realty once again, that posted a +1% gain for itself, while we had the Nifty FMCG that managed to close about 1% higher. As far as the losers are concerned, we had the Nifty PSU Bank and the Nifty Pharma Index approximately 0.5% lost from both those indices. Now, as far as the volatility was concerned, yesterday, mind you, the Nifty was in a very tight range, and the volatility actually cooled off to the tune of about 1.5%. Now, if you look at what contributed to the 20-point gain of the Nifty, so we had HDFC, ITC, and ICICI Bank that actually managed to close higher, while we had Axis Bank, Infosys, L&T, and TCS, which declined in trade. But that is as far as the trade setup is concerned. Agam, what cues are you picking up from the F&O space?
Right, Jayesh, as you put it, we've seen a day of consolidation, largely range bound. So with respect to what we've seen in terms of the futures and options space, not too much. In fact, in open interest, there's been very little change in the Nifty futures. Coming down to the Nifty Bank futures too, let's take a look at how we've seen pan out in that. About 5% increase in open interest. Again, it's not momentous. But, when it comes to the WIX, again, we've seen very little change, hanging around the mark of 14, and it has been largely range bound between 14 and 15, and very little change in the put call ratio either. So, standing at 1.63. In terms of the big moves with respect to options, we've seen more unwinding in the 10,300 put and the 10,400 call. And moving in terms of stocks, we're watching out for Balrampur Chini, which moves out of the ban. And among others, we're watching out for something like a DCB Bank, which saw fresh longs building in, and also something like Power Grid, which was also one of the top Nifty gainers in yesterday's day of trade, looking at a 17% addition in open interest towards fresh longs. So plenty of stocks out there to watch out for. But when it comes to the benchmark indices, indications still are as far as range-bound trade.
Thanks so much for that, Agam. Now on to a Bloomberg exclusive. You'll remember perhaps that the Infosys earnings were in line with estimates, but brokerages weren't too happy about the margin guidance. Now, Infosys CEO Salil Parekh believes that the time is right for the company to sacrifice margins in order to invest in advanced technology and skill and to remain relevant to clients in the future. Let's go across to Bloomberg Sarita Rai for more on this. Sarita, what more did Salil Parekh have to say?
Well, the most significant point he made was about, spending on investments in advanced technologies and also reskilling in order to capture the opportunities in the market. So his whole thing was about positioning the Infosys of the future, which includes pumping money into technologies such as Internet of Things, autonomous vehicles, as well as retraining workers in them. Infosys has 200,000 employees, and certainly a lot of them have only had experience working in legacy technologies. He needs to prime up the Infosys workforce to be able to handle client demand in these new technologies. And of course, he was also talking about localizing the workforce. That was another key thing that he made, the point that he made about Infosys hiring, also turning into one of the big hirers of college graduates in the U.S., even while he finds that the technology talent supply in the U.S. is constrained. Yes, those were some of the key points that he made.
All right, we'll leave it at that. I'm sure we'll come back to this conversation over the course of the day. Thanks so much, Sarita, for joining us this early in the morning. Let's move on now and take a check on the rupee and the bond market. Saloni Dhanuka has all the updates there. Morning, Saloni.
Good morning, Alex. So the rupee has extended its losing run for the second straight session and falling by another 15 paise yesterday to close near a 7-month low of 65.65 levels against the dollar. Now, this is on the back of persistent capital outflows from the local equity markets, along with surging crude oil prices, is largely weighing on the rupee. Now, the domestic unit has turned out to be Asia's worst performing currency this year after Filipino peso. It has weakened nearly 2.8% on a year-to-date basis. And remember, the domestic currency has weakened close to 1% in the last 3 trading sessions, breaching the key technical level that was hinted by Mr. Bhaskar Panda of HDFC Bank earlier this week to Bloomberg Quint. He believed that a breach of 65.50 levels will lead to an immediate resistance of 65.87 levels for the home currency. So we will keep an eye on these levels hinted by Mr. Bhaskar Panda. And speaking about the bond market, sovereign bonds ended little changed after yield on the 10-year benchmark security ended steady at 7.49% yesterday. Now, in terms of flows into debt market, global funds reduced their rupee debt holdings for the 3rd consecutive session yesterday. They reduced their debt portfolio in the tune of 2,260 crores according to NSDL data. Well, on the global front, dollar gained marginally yesterday on the back of upbeat economic data, and it trades higher for the 2nd consecutive day today near the 89.50 levels. Well, euro slipped 0.1% against the dollar yesterday on the back of disappointing economic data. While on the flip side, pound snapped 7-day winning streak, and it is trading 0.3% lower against the dollar on the back of disappointing UK wage data which came in yesterday evening. And lastly, speaking of dollar rupee, now it is trading at 65.68 levels against the dollar in the non-deliverable forward market, which indicates a flat to negative opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. And speaking about the rupee, at least 5 states in India have been facing an acute shortage of cash over the past couple of weeks, with citizens having to face empty ATMs or stand in long lines to withdraw cash. For some, it was a case of deja vu. They'd faced the same thing during demonetization. While the government says that there is no need to panic, we still don't know why parts of the country are running short of cash. Ira Dugal spoke to Sanjeev Sanyal, the Finance Ministry's principal economic advisor, to try and understand why. Listen in.
There's been a sudden and unusual spike in demand for cash in some parts of the country, particularly in Karnataka, Telangana, and some of the surrounding states, although today we saw that spread to a few other parts of the country as well. I would not like to speculate who and why this particular spike has happened, but let me assure all people watching this show that the government is very aware of what has happened and will respond. There is no need to panic. We have more than adequate cash, and they will be supplied both through the ATMs and the bank branches very, very quickly in the next few days.
No, that clarification absolutely taken, sir. But, you're calling it unusual. So then is it fair to assume it's not linked to typical drivers like, for instance, a pickup in inflation, which we don't have right now in the economy, or festival season, or perhaps, elections, where at least historically in India, every time there are elections, you do tend to see cash move up or currency in circulation move up. So you're saying it's none of these, or it could be these plus others?
Well, as I said, I'm not in a position to speculate exactly what has caused it. Nevertheless, it is unusual in that this is certainly more than what would normally have happened due to a festival season or whatever the usual seasonal factors that are there, which would have already been accounted for by the Reserve Bank as a normal matter of course. So there has been a spike, but our first order response is to make sure that adequate cash is available at ATMs and in banks, so that whatever demand, for whatever reason it is there, is met. Because there is no crisis, the banks are in perfectly good shape, and we have more than adequate cash, and more will be printed if necessary to supply it. So there is absolutely no need for anybody to panic about this.
Over what period of time has this shortage or reports of this shortage emerged? I'm sure you have first-hand reports. Is it a couple of weeks? Is it something that's built up over a period of time? Because some of these things in cash in particular are sort of self-enforcing. You talk over here of cash shortage, you go and withdraw more cash and sort of make the situation a bit worse.
So there was an increase over the last few weeks, but I think it's really in the last few days that this has certainly come to a point where obviously it's in the media and requiring a somewhat more quickened response from the RBI and the government. So even in the normal course of being, these kinds of things like demand for cash do spike up and down within some range. So one doesn't respond to every unusual thing. But yes, what has happened in the last few days is certainly outside the normal range. So requiring consequently clarifications from the government and a somewhat quicker response now from the Reserve Bank and the Finance Ministry on a coordinated basis.
Now, the International Monetary Fund has forecast that India will grow at 7.4% in 2018 and 7.8% in 2019, retaining its earlier guidance. In the latest World Economic Outlook, the IMF has said that India would re-emerge as one of the fastest growing major economies. It also acknowledged India's progress on structural reforms, but flagged off key concerns such as high public debt and inability to steer towards fiscal consolidation. The global body has projected that China will grow at 6.6% and 6.4% over 2018 and 2019 respectively. Well, that's about India and China, but on the global forecast, IMF expects that the global economy will grow 3.9% both this year and next. But it warned that any further trade disputes could derail global growth. And while the strongest upswing of the world economy since 2011 is expected to continue for the next 2 years, the IMF has warned that the downturn is not too far off. Enda Karan of Bloomberg News reports.
Well, we have a big gathering of all the central bank governors and finance ministers from around the world. I suspect we'll hear more on the theme you just outlined, which is global growth right now is okay, but longer term there are challenges, and one of those challenges will definitely be trade and the rise of protectionism, and it will be interesting to see just how much that issue does dominate the talks down there, especially when we'll have Chinese officials, US officials, and of course all of the G20 gathering as well. Whether or not tensions will get any worse during the course of those meetings in Washington, or indeed if there will be some kind of a pathway agreed among them all to try and ease or cool those issues. But right now, I think if anything, the rhetoric seems to be getting somewhat worse given the moves overnight.
Well, let's shift focus now to the commodities space, and Jayesh Kinlani is here with all the updates. He spoke about it briefly. Jayesh, what are the key details to watch for?
Morning, Alex. Like I was telling you that no major cues coming in from the entire commodities basket. So if you have a look at oil prices, those are actually trading about 0.5% higher and actually managed to close about 0.5% higher as well overnight. Now this is all on the back of industry expectation of crude oil inventory that is likely to fall as much as 1.05 million barrels for last week. So those are the cues from the oil market. But as far as the base metal space is concerned, most of the base metals closed mixed on the London Metal Exchange. Aluminium was once again in focus. Now the aluminium ingredient alumina, that is forecasted to hit a record high on the squeeze that we have experienced on account of the sanctions on Rusal. Now also what we understand is ETF investors have actually cashed in gains on account of the aluminium surge that we saw for last week. Also, as far as the copper markets are concerned, speculators have increased their net long positions on copper as well. So as far as individual base metal moves were concerned, tin was the top gainer, that gained about 2% in trade. Aluminium and zinc managed to close higher on London Metal Exchange, while we had copper, lead and nickel, which declined nearly 0.5% to 1% each. Now if you look at the Shanghai Futures Exchange, same cues can be picked up. Most of these base metals are trading mixed. However, look at Shanghai Steel, that has opened with a gap of about 2.5%. As far as gold prices are concerned, trading largely flat near the 1350 per ounce mark.
Thanks, Jayesh, for that. Now, the list of suitors for Fortis Healthcare is apparently getting longer. The company received a non-binding bid for China's Fosun International for primary infusion of up to a total investment of 2,275 crore. That includes a preliminary investment of 100 crore rupees. Somit Sarkar is here to break down the numbers for you. Somit, over to you.
So the offer is of around $350 million, that is close to 2,275 crore rupees. Now in this, Fortis, as they are in immediate needs of fund, Fosun will be infusing close to 100 crore rupees within the next 45 days as convertible debt instruments, while the remaining amount will be invested via equity shares. Now overall they are investing close to 2,275 crore rupees at 156 rupees per share. Now the catch here is that the company is willing to invest 100 crore rupees for convertible debt instrument, but it is asking for a 1 month exclusivity period to undertake due diligence and to negotiate the offer post that. Now due diligence is expected to take at least 3 weeks, and after that due diligence there are chances that Fosun might lower the acquisition price or even cancel the deal, because they are clearly saying that they will be negotiating the offer after they are done with the due diligence. Now Fosun is also saying that at any point of time their stake in Fortis will not exceed 25%, which clearly says that there won't be any open offer because it is not exceeding 25%. Now this is the fourth offer that Fortis has received. Earlier they had received offers from Manipal, IHH and the Hero and Berman Group, and the acquisition price per share is similar to what earlier offers were. Now but Manipal had offered 156 rupees per share, while IHH had offered 160. Hero and Berman Group had said that the price will be higher of the SEBI price or 156 rupees per share, and this acquisition price is also 156 rupees per share.
All right, thanks so much, Somit, for breaking that down for us. We'll, of course, stay with that story over the course of the day, so you can tune into Bloomberg Quint Live for more updates there. But let's move on now to earnings. Cost pressures may have weighed on ACC's earnings performance in the March quarter. The cement major is expected to report an operationally weak set of numbers with a decline in both profit and margins. Nikki Mirchandani is here with what the analysts are pricing in. Morning, Nikki.
Hi, we're not expecting good set of numbers coming in from ACC, which is also the first company which will kickstart officially the earnings season for all the other cement companies. I'm going to quickly run you down through the basic numbers. Revenues are seen up as much as 13% for this company on year-on basis to a number of around 3,500 crore as compared to 3,100 crore that we've seen in the corresponding quarter. EBITDA is seen down by as much as 9% to a number of 380 crore as compared to 416 crore that we've seen in the March quarter of the previous year. Margins are seen contracting at 11% as compared to 13%, and the profitability that's seen down by at much at 11% to a number of 189 crore as compared to more than 212 crore that we've seen in the corresponding quarter. In terms of other parameters, we'll also like to keep an eye out on the volume growth, which is actually expected to be flattish at 5% year-on-year basis to a number of 6.93 MT 6.3 as compared to nearly 6.92 that we've seen in the corresponding quarter. EBITDA per ton, which is an important metric that we need to keep an eye out on, is also expected to slip as much as 13% to a number of 549, and realization per ton, however, is seen up as much as 8% to a number of 5,062. Now the cost pressures, as you just mentioned, Alex, are expected to outgrow the realization, on account of which we are expected to see a dip in terms of the operating performance of the company. Volume growth is expected to remain flattish due to the emerging capacity constraints. The key things that we like to keep an eye out will be, as mentioned earlier, will be your EBITDA per ton, given that we are witnessing some kind of power cost pressures. Also, the volume growth will be an important parameter which will also set the tone of the other pan-India players' volume growth, and the pricing power, which so far seems to be depressed for cement companies.
All right, thanks for that, Nikki. Clearly, ACC is one of the stocks that you have to watch out for. Of course, you have Fortis Healthcare as well. But Shraddha Babla is here to tell you about all the other stocks in the news. Shraddha, what do you have for us today? Morning.
Good morning, Alex. Starting off with AstraZeneca Pharma India, which will be in focus, especially after its parent company said that they will invest another $90 million more in its Indian subsidiary over the next 5-year period. So watch out for that name. You also have Lupin, which has received a tentative approval from the US FDA for generic androgel. Why is that important? The generic drug had a market size or market sales of $950 million in US. So it's a reasonably sized drug. Do remember that it's a tentative approval. You have Indian Hume Pipe Company. You could see some positive reaction there on the back of order wins worth 108 crores. Chagnan Prakashan, they've said they'll consider a share buyback on April 27th. So watch out for that name. Also, two earnings that I want to highlight. One is Tata Sponge Iron, a very good set of numbers, mainly driven by operational efficiencies that were driven on account of higher sales. So revenues were up 46%, net profit more than doubled to 47 crores. Operationally, the EBITDA grew by 142%, and EBITDA margins also saw an increase of 10 percentage points to 25.3%. So good set of numbers coming in there. 5paisa Capital on a year-on-year basis, it's a mixed set of numbers, because while revenues grew 60% on a lower base, the net loss widened from 3 crores to 7 crores. And you also have a couple of deals. First of all, Talwarkar Fitness, where Tata Mutual Fund has sold 1.3% stake. They held about 1.75 in the December ended quarter. And then you have Ajmera Realty, where promoter Rajnikant Ajmera sold 1.4% stake. So Alex, some of these names that we need to watch out for.
Thanks so much for that, Shraddha. Now on to a special report. The top honors for journalism, the Pulitzer Prizes, were announced in Columbia University on Monday with a surprise winner. Take a look at the key highlights. Well, that's all we have for you in this edition of Daybreak, but there's a lot more coming up on the other side of this very short break, starting with all you need to know. Thanks for watching. This is Bloomberg Quint.